The SEC is suing crypto trading platform Coinbase, saying it is operating illegally as it failed to register as an exchange.
And that is just the latest move in a crackdown, it appears, against crypto companies in general. Earlier this week, the SEC sued Binance, accusing the platform of inflating trading volumes, misleading investors, and secretly controlling customers' assets.
Well, let's bring in Jon-Jorge Aras. He is a partner at Warren Law Group and head of the firm Securities litigation. Jon-Jorge, tell us, why are we seeing this crypto crackdown?
Good afternoon. It certainly is a crypto crackdown that I think has been long brewing from the SEC. They've taken the rules that they've had in place and now they're implementing them and creating a new regulatory environment for these crypto-based firms.
Now, that sounds logical. If they have rules and regulations, it's important that they enforce them. But speak about just the size of this effort, because Binance and Coinbase are some of the biggest, I guess, crypto platforms on the planet and in the country.
I think that the SEC has done this by design, taken time with smaller firms, and now they're going against the headliners. The SEC does very much like to be in the news, to let everyone know that this is the state of regulation. So going after the big fish, Coinbase and Binance, is showing everyone else in the industry there are rules that have to be abided by. So it's a risk on the one hand from the SEC in that they're such big players, but by the same token, they're really setting the tone for the crypto industry going forward.
Talk to us about the charges that are hitting these cryptocurrency platforms. How serious are they?
They're very serious charges. They're mainly revolving around the unregistered sale of securities. And according to the US rules, securities that are sold in these public markets require registration, and registration requires disclosure. That disclosure, if we think about it in a way, looking at an Apple has to disclose in quarterly and public filings their finances, their projections, and the SEC believes that these entities, Coinbase and Binance, have been selling unregistered securities to unsuspecting investors who lack the disclosure necessary to make the decision to invest.
And of course, we know that this follows the massive collapse of FTX and the kind of, its leader being facing justice. If anyone has money or crypto on these platforms, what do you suggest they do?
It's a very precarious situation. I know as of today, the SEC is seeking an asset freeze over Binance's securities or crypto that they're custodying at this point. So having your funds as an investor on an exchange could put them at serious risk of being able to not liquidate them and not being able to essentially withdraw your funds from these exchanges. So it is a very precarious time for the day-to-day investor.
Jon-Jorge, what you're saying sounds pretty obvious, though. I think most people who have crypto understand that it is not a guaranteed.
It's risky.
That there are risks involved. Is the SEC alleging that beyond not registering properly, that there were other things that they're doing that exhibit malfeasance?
Certainly in the case of Binance, they're alleging that there were other manipulation going on with trading volumes, which could lead an investor to believe that there was more or less trading happening in a particular asset. And this is problematic from a fraud point of view. It's not just a lack of registration. This is a deceptive practice, which the SEC has alleged in Binance's case. So for the everyday investor, it shows that there may be more going on behind the scenes than just a failure to register a security, that really some of these platforms could be manipulating the way that trading is occurring.
It's a loud warning. Crypto investors, beware. Jon-Jorge Aras, thanks very much for joining us today.
Thank you so much for your time.